Joining us. It's great to have you here with us. It's very hard to have a conversation these days without mentioning COVID-19, the coronavirus pandemic, and the impact on all sectors of the economy. Can you just give us a snapshot of how your business has been impacted?
I think there's mainly two themes that we're seeing in this market right now. The first being we have seen expansion in the leasing risk premium in the market. And what I meant by that is, coming back to 2 months ago, we have seen the market that if we have two identical buildings trading alongside each other, one being fully leased, the other one is vacant, we could have seen a very little price difference between them. Being the vacant building probably trading at a 5 to 10% discount to the fully leased buildings. Right now in this market, what we have witnessed is that discount has expanded to somewhat around 25 to even 40%, which means the value of the fully leased building hasn't been dropping that much, but on the other hand, a vacant building has coming down quite dramatically in a course of 2 to 3 months. So, which is sort of self-explanatory because we are probably going into the toughest leasing markets that we have witnessed in the last decade. I guess the second theme is where the debt market is heading. We have definitely experienced a much tighter credit environment. So all the lenders are now have more selective on their loans. They demand higher price, and at the same time, they require lower leverage. So all of those things combined, that we have seen the market shifting from firstly a landlord's market to the tenant market, and secondarily a borrower's market to a lender's market.
Alan, hello, it's Gemma Acton here. Let me ask you about the point about this being a tenants market. We've seen the government actively encouraging landlords and tenants to go back to the drawing board, renegotiate leases, and try and be as helpful on both sides as they can be. On the whole, it seems as though landlords are having to be a little more helpful towards their tenants. So how valuable is a fully leased building at this point?
I think a fully leased building is definitely holding up its value. However, it also imposes a very significant risk because we have seen a lot of situations that tenants are pulling out their lease, or some of the development assets, the tenants, the very big names, the reputable tenants, they're pulling out from their pre-commitments. So I think on one hand, the building are definitely holding up its value being fully tenanted, but on the other hand, the inherent risk of those buildings are once they lose their tenants, arguably the value of those buildings could go down 20 to 30% on a market-to-market basis.
And tell us, Alan, how do you identify opportunities in a regular market, and how have you had to adapt that for the current conditions?
I think on a regular market that everything is sort of normalized, that we assume the natural growth of the properties, the natural growth of the rental. So being good tenants, good locations, and all of those things that really matters. But in this very uncertain time, I think what has changed is, as we just discussed, that traditional property investment philosophy about buying and hold, buying assets, income generating assets, collecting rent, and try to sell them, hoping in a future time, and hoping the market will go up. That strategy is probably going to be very risky because of the inherent risk of, as we discussed, that once they lose the tenant, the value could potentially go down. So what we've been focused on are two main areas. The first area is what we always traditionally focus on is the value-add strategy. We believe those, because of the general discount to some of the vacant buildings, at the same time that represent a lot of opportunities. Having said that, we still need to execute that strategy very carefully. So I think the most important thing is to buy those buildings under that replacement cost. That will give us a certain degree of margin of safety, and then we actively adding value to those commercial properties. Strategies like going through a refurb of the building, Sometimes it's about increase the lettable areas. A lot of times about improved amenities, which is a very big thing in a tenant-driven market. And then even to some extent, working with the tenant to provide that bespoke or tailor-made service, tailor-made space for those tenants. That's probably the best way to attract those tenants. And then after that, it's about managing the cash flow and sell them in a more normalized market. And
Alan, just quickly, let me ask you, in the current climate, are you seeing buyers, so your competition, drop out, or are you seeing the same level of competition just at a lower price point?
We have seen the competition definitely dropping out quite significantly. I think leading into this, every major express of interest campaign that we participate, we would see the number between when we're talking about $50 million plus buildings, we'll see a number somewhere between 10 to 20 bidders. In some extreme cases, about 30. Now we're seeing that number probably down to 2 or 3.
Alan, it's been a pleasure to have you on the channel. We do hope to check in with you again to see how things are progressing in this rapidly changing environment.
I think that the environment also presents a lot of opportunities as we are still actively purchasing assets. And then a second thing that I forgot to mention is at this time, because of the debt market has changed, the debt market is shifting from a borrower's market to a lender's market. So what we have seen is a lot of distressed debt opportunities in the market. And then in this particular time, when the time is uncertain, investing distressed debt is not only about providing the capital solution, it's also about providing the operational skills and to the buildings or to the project. Sometimes involve planning out a very detailed asset management plan. Sometimes it's about introduce to the project to the new capital channels. And a lot of time is about just rolling up the sleeve and do it ourselves.
Well, we wish you luck. Alan, we'll touch base soon. Thank you so much for taking us through that. Appreciate it.
Thank you for having me. Thank you.
Alan Liao there. He's from AVARI.